Good morning, good afternoon, good evening, depending on where you are watching us from. Welcome to this event, this conversation on the reforms of the IMF's Prgt, which is the Poverty Reduction and Growth Trust, about which you will find out more in the next hour and a half. And it's a great pleasure for us at the Center for Global Development to be welcoming you to this event and to co-host it with ASSET, the African Center for Economic Transformation. And I'm particularly happy to be co-moderating it with Ed Brown. And welcome, Ed. It's a great pleasure to co-moderate this event with you. We're also very pleased today to have the principal architects, authors of the recent reforms of the Prgt from the IMF, Guillaume Chabert, who is a Deputy Director in the Strategy, Policy and Review Department, and Charlene Gust, who is from the Finance Complex. And one of the great things that, from my own experience in the IMF, is that whenever there is a reform of an IMF facility, there's a very close partnership between the Strategy and Policy Department and the Financing Department. The two need to march hand in hand. So I will turn to them shortly for a presentation. We also have a very distinguished panel of policymakers, experts, analysts who have all been following the fund's work and guiding it in different ways from where they sit. And I'll turn to Ed in a minute to introduce them to you. Just 30 seconds of sort of background on the IMF Prgt. Last year, a lot of focus was on the reforms of the SDR. You remember there was a big new allocation of $650 billion worth of SDRs, and there was a big discussion on how these SDRs could be best deployed to support low-income countries, to support development more generally. But in the process, perhaps there was another set of reforms that didn't get as much attention, which was the reforms that the IMF undertook to the Prgt. And the Prgt, as I said, the Poverty Reduction and Growth Trust, is the pool of money that the IMF uses to support low-income countries with concessional loans. Some of them are done through regular longer-term economic support programs, and some of the money is dispersed through emergency loans that are provided in response to shocks. Now, with the pandemic, there was a big increase in demand for the fund's support by low-income countries, and indeed, the numbers went up quite dramatically. From an average, the Prgt used to disperse about between $1 and $2 billion a year over the last few years pre-pandemic. And I think since the pandemic started, I speak under the correction of Charlene and Guillaume, but if I'm correct, since it started, I think the IMF has dispersed about $15 billion through the Prgt. Or at least committed $15 billion through the Prgt, and not all of it will have been dispersed yet. So you can see a big increase. And if you look ahead, I think a lot of people, including ourselves, myself and colleagues in the Center for Global Development, have been arguing that for low-income countries to be able to manage the protracted and difficult and uncertain recovery in the years ahead, they will need continued high levels of support from the IMF. So the question is, can the Prgt continue to provide support at the sort of elevated levels closer to the years of the pandemic, 2020, 2021, than trying to go back to the earlier levels? And it's in this context that the IMF undertook a sort of long, hard look at the Prgt and how it could be reformed to work better, to meet the changing needs of low-income countries. And I want to say, we are often outside the IMF very quick to point out the things the IMF should be doing more of or differently, but credit where credit is due. It was an example of the IMF's willingness to quickly come to recognize that the needs of its low-income members have changed and to look and see what could be done to reform the PRGT to reflect that. Now, have they done enough? Does it go far enough? Will the reforms actually deliver what is expected? These are all the questions that are going to be raised. And I hope we will have an opportunity not just to hear from our panelists, but also from you in the audience. Please do send your questions or comments, and we will make sure that we have an opportunity towards the end to pass them on to our experts and to our panelists. So with that, let me turn it over to Ed to offer a few remarks and then to move forward. Thank you very much, Ed.
Thank you so much, Masood. Let me also join Masood to welcome you all to this all-important conversation. We at Asset are particularly delighted to co-host this webinar with the Center for Global Development. This is the third in a series of ongoing events that we are co-hosting this year. And I think Masood has eloquently set the scene for this conversation on the recent reforms to the PRGT, highlighting some of the key issues and questions. And as he rightly said, we will be hearing from the fund team a presentation on the recent reforms to the trust. So I would just make very brief remarks. I had about two main points I wanted to add to what Masood was saying. I think we all are appreciative of the commendable effort that the IMF has done to rapidly respond to the pandemic. It is highly commendable. But one issue that continues to be raised is the moral hazard issue. While the IMF, as Masood said, about 15 billion is either disbursed or about to be disbursed, and another 32 billion is being planned, and the likelihood of an even increase 52 billion if the demand rises. Now, the question is, while we can understand the need to move rapidly and not burden countries with undue conditionalities, one of the things that Asset had tried to advocate for during this pandemic is that the pandemic presents an opportunity to implement reforms that might hitherto be difficult to implement. So the question to the PRGT, although this is a zero interest loan, does it come with some form of agreement on policy reforms? It's not clear to us at this time. And if not, why not? And I think it also then translates to the issue of debt, and the fund, has emphasized that they will be paying additional attention to the debt levels of the countries, at risk. But it's still not clear what that means, As I said earlier, there is, a higher disbursements on SDR to these countries. And this is highly commendable that it's a zero interest loan, but they still have to be paid back. So, and if the countries are using these loans to provide social support, buy vaccines and pay salaries, the question is, the financial returns on these are very suspect or non-existent. So how is the fund going to monitor and pay greater attention to the debt issue? And then the other point I just wanted to raise is just quickly, is the Chinese factor on debt. So I hope Guillaume and the team would help us understand this a little bit, because it will be interesting to know how the IMF is coordinating with China, which continues to make, investments which are sometimes questionable to African nations, including low-income countries, and how they're also coordinating with those nations that are currently accessing Eurobond markets, such as my country, Ghana, where the debt sustainability issues are becoming a little bit more alarming. So I think these are areas that I think we would like to hear a little bit more response from the fund team on. So I would stop here. I had wanted to add one third question, which was, the issue raised by Aphrodite in their recent inaugural African conference on debt and development, about the whole debt restructuring architecture and what needs to be done about that. But I would stop here for the moment and hand over to Masood to moderate the first presentation by the fund. Thank you very much.
Thanks, Ed. And then I think once we've done that, then we will turn to our distinguished panelists and introduce them at that time. So let me start off. Guillaume and Charlene, it's over to you to give us an overview of what these reforms are. So can I turn over to you, please?
Sure. Thank you very much, Masood, and thank you very much, Ed. And good morning, good afternoon, and good evening to everyone. I would like to start by thanking the Center for Global Development and the African Center for Economic Transformation for organizing the discussion today on the Prgt and on the reforms that were approved last July. As you mentioned very rightly, Masood, perhaps those reforms haven't received the attention that they deserve. So it's very, for us, good that we can have this opportunity to discuss those reforms. So we have prepared the presentation together with my colleague Charlene and also other colleagues from the fund that I would like to mention because they are also with us today in the virtual room. So Christian Mimson from the Finance Department, Wes McGrew, Mashti Debish, Diva Singh from the Strategy, Policy and Review Department of the fund. They may intervene also later in the discussion as appropriate. Let me try to do something which is always very complicated, which is to share my screen. I hope this works.
It's good, working.
Okay, so our presentation is organized around 3 items. First, we will provide a brief overview of where we stand in terms of IMF lending to low-income countries and why we thought that reforms were needed. Second, very rapidly, we will present the technicalities, a few technicalities on the IMF Lending Toolkit. And third, we will come to the reform package that was approved in July. On the first item, as you mentioned, Masood, the IMF increased dramatically its support to low-income countries during the pandemic. As you see on the chart, IMF lending to low-income countries surged in 2020 to $13.2 billion, more than 6 times the pre-COVID average. In 2020, a record number of 50 low-income countries benefited from funds lending. As we remember, this could be done thanks to the rapid adoption in April 2020 of a temporary doubling in funds limit to emergency financing and the streamlining of procedures to allow rapid delivery of large-scale support. In addition, the fund also supported low-income countries during the crisis with or through debt relief. Thanks to contributions from members, the fund could provide debt relief to 31 low-income countries for almost $1 billion. And as Ed just mentioned, we are also working actively on other debt issues together with the World Bank. In 2020 and 2021, we worked a lot on the implementation of the G20 Debt Service Suspension Initiative, the DSSI, and we are now working hard to facilitate as much as we can the implementation of the G20 Common Framework for Debt Treatment. And there may be a follow-up discussion on that, as Ed alluded to. Now, on these slides, we wanted to show that we have already moved to another phase of the crisis and the crisis response since the spring of 2021. The graph shows IMF lending to low-income countries from January 2020 to the summer of 2021. And you see 3 different phases. In the first phase, from March to July 2020, the IMF disbursed quickly more than $11 billion, quasi-exclusively through emergency financing. The figures are all about disbursement, not commitment. So this is really what has been disbursed. In the second phase, from August to December 2020, new lending was modest, with only $1.5 billion disbursed, equally split between emergency financing and multi-year programs. Since last spring, we have entered another phase. We see a pickup in lending, and very importantly, a shift to multi-year programs, in line with the transition from the emergency response to a more structural approach. This is the red dotted line that you see on the graph. And you see, this is also a tentative answer to Ed's a very good point, which is that multi-year economic reform programs from the IMF come with conditionality. So indeed, there is an agreement on the policy reforms that are needed, and the fund is there to support and foster those reforms. So now, going forward, we expect the demand for fund support to remain high. The pandemic, as we know, will have enduring effects, in particular for low-income countries. The recovery in low-income countries is projected to be less favorable than for advanced economies. This is what you see on the graph on the left, which compares the evolution of GDP per capita for low-income countries and for advanced economies. The two green lines that you have are the GDP per capita for advanced economies, with the dark green line being the pre-COVID projection and the light green line being the current post-COVID projection. And you have in blue the same for low-income countries. So what you see is a much less favorable situation for low-income countries. Advanced economies will surpass pre-COVID projection as early as 2022, while low-income countries will remain below pre-COVID projection for the years to come. On the right, you have exactly the same story, but through another angle. What the graph shows is the income convergence between low-income countries and advanced economies. The dotted line is what was projected pre-COVID, and the red line is the current projection. So what you see is that not only low-income countries did suffer a reversal during the pandemic in terms of income convergence, but the pace of convergence post-COVID is slower than it was anticipated pre-COVID. So turning to projected demand for fund financing, we expect indeed higher demand in the years to come. Low-income countries have limited financing options to respond to the crisis, which is far from being over, to jumpstart their economies, and also to cover the high financing needs low-income countries face to support their development. We expect the demand for fund support to be more than 4 times the historical average in the few years to come. Hence, a need for reforms. Indeed, there are limits to what countries can borrow under IMF concessional facilities. These limits, as we know, are set as a multiple of IMF quota. Given the size of emergency support during the pandemic, given also the need going forward, the limits that existed prior to the reforms would have constrained severely the capacity to borrow of low-income countries and the capacity for the fund to help those countries and support their reforms. I would like to briefly turn over to a few elements on the Imf Lending Toolkits before turning to the July reforms. So this slide aims just to recall that the fund manages 2 sorts of facilities and 2 sorts of resources. What we call the general resources account, the GRA of the fund, is the general resource of the fund that are available to all members of the fund, so to all 190 members. The different facilities under the GRA are provided with a low but positive interest rate, and there is no hard cap on the level of access if circumstances are assessed as being exceptional. On the other hand, the facilities under the Poverty Reduction and Growth Trust, the Prgt, which is a separated trust fund, are not available to all countries, but only to a subset of them based on income eligibility criteria. Low-income countries benefit from more favorable conditions with loans at 0 interest rate, longer maturities, and longer grace periods. Those resources, those concessional resources, are limited and constrained in terms of volume because they come from the stronger macroeconomically stronger economies. So total volume of lending as a Prgt is constrained by the size of the trust fund. And because resources are constrained, there was until the July reforms a hard cap, an absolute cap, a hard cap on the capacity to borrow under the Prgt. In practical terms, we have currently 69 countries eligible to the Prgt, and 49 of the 69 eligible countries indeed used Prgt lending in the pre-COVID decade. Now, on this slide, we wanted to show briefly the different facilities under the Prgt. There are 3 facilities, all at 0 interest rate currently, with the extended credit facility, the ECF, which is available to address situations of protracted balance of payment problems. Programs under the ECF are implemented over a period of 3 to 5 years, with a maturity to repay of 10 years and a grace period of 5.5 years. This is a workhorse of funds lending to low-income countries facing protracted BOP problems, which frankly are very often the case. The standby credit facility, SCF, is available to address situations of immediate or potential BOP problems with shorter programs and maturities. And we have the rapid credit facility, the RCF, which is there to address emergency situations and which was used massively during the pandemic and in particular in the spring of 2020. We have also under the PRGT a policy support instrument, so a non-financial policy signaling instrument. And it would be important to recall that all members have access to the GRA, to the non-concessional resources of the GRA where needed. So turning to the July 2021 reforms, there were actually two interconnected dimensions which formed the package. On the one hand, the idea was to enhance support for low-income countries. On the other hand, we had to agree on a funding strategy to get the resources that are necessary to back a higher support. With regards to the enhanced support for low-income countries, cornerstone of the reform is an increase by 45% of the access limits under the PRGT to align the limits under the PRGT with the level used for the GRA. This is straightforward. Since July, low-income countries have the possibility to borrow 45% more than before through the PRGT and its favorable conditions. I think it would be also important to recall that before this reform, we had already increased the PRGT limits in 2019 by 33%. So altogether, in a little more than 2 years, we increased the limits by 93%, so almost a doubling of the limits in less than 2 years. In addition to the increase in limits, I think it would be also important to mention the fact that in July, we got rid of the hard cap. We eliminated the hard cap that pre-existed. So now the poorer low-income countries, currently 34 low-income countries, have the possibility to receive all IMF financing through the PRGT loans with 0 interest rate. Lastly, we also use the opportunity of the reforms to simplify the rules to identify among the richer low-income countries those who need to blend, meaning that they must to borrow partly under the PRGT and partly under the less favorable conditions of the GRA. So this slide just recalls the new and past limits in terms of cumulative access limit, in terms of annual access limits. I will not go through the different cells of the table, of course, but what you have on the right column, which is the new limits, is pretty straightforward in comparison to the past limits, which is the cells in the middles. You see that the limits are higher, and importantly, there is no cap anymore for the poorer low-income countries to borrow entirely under the PRGT. So higher lending, of course, comes with higher risks, and therefore the need to enhance safeguards in parallel to the increase in limits. This is very much related to the debt challenges facing low-income countries. The underlying difficulty indeed is that debt challenges in low-income countries have increased. We have now 39 of the 69 PRGT eligible countries that are assessed as being in high risk of debt distress or already in debt distress. There were only 19 in 2015. As we know, COVID-19 has not created the situation. The trend to move from green and yellow on the chart to red and black on the chart, so meaning moving from low and moderate risk of debt distress to high risk of debt distress in red and already in debt distress in black, as we see on the charts, that started well before COVID. But definitely COVID has further exacerbated those debt challenges. So we have a need to both protect fund resources, but also to avoid adding more debt without resolving the underlying debt challenges and difficulties. For that reason, the reforms approved in July include a strong emphasis on debt issues with a need to develop in future programs a deeper analysis of debt composition and debt dynamics. And for countries at high risk of debt distress or already in debt distress, program objectives will have to include a concrete reduction in debt vulnerabilities over the medium term. Second component of the reform, as I mentioned, is the funding strategy. Let me turn to Charlene for this part.
Thank you very much, Guillaume. And I just want to join you in thanking the organizers and saying how much we're happy to be here for this event today. Before I discuss the Prgt funding strategy to support the reforms that Guillaume just described, let me say a few words about its financing framework. Prgt lending is supported by an endowment-based financing model that relies on both loan and subsidy resources. Loan resources are provided through bilateral agreements with members and on lent by the Prgt on a pass-through basis to eligible low-income countries. Resources from Prgt loan contributors are borrowed from individual member countries and institutions at market rates from official creditors. These loan resources are non-revolving and need to be replenished at regular intervals through borrowing agreements. The Prgt's reserve account provides security to the lenders to the loan accounts in the event of delayed or non-payment by Prgt borrowers. It also plays an important role in Prgt self-sustainability, as I'll mention in a moment. Subsidy resources cover the difference between the market rate paid to loan contributors and the concessional currently zero rate paid by Prgt borrowers. These resources come from the fund's own resources and donor contributions. The subsidy costs to bring interest rates to zero are financed from balances in the Prgt subsidy accounts provided by bilateral creditors, and investment income from the reserve account will eventually be used to subsidize concessional lending under the self-sustained Prgt. Under the self-sustained model, the resources in Prgt subsidy accounts would be gradually drawn down to zero, while balances in the reserve account would grow over time by the amount of the investment returns on the reserve account's balances until returns on its assets would subsidize Prgt lending in perpetuity. As Guillaume mentioned earlier, we've already seen a large surge in demand for Prgt borrowing as a result of the pandemic, and demand in the coming years is expected to remain elevated. In order to ensure the Prgt is adequately resourced to meet this demand, the IMF's Executive Board approved a two-stage funding strategy in July. In stage one, a fundraising campaign was launched immediately following the approval of the lending reforms in July to mobilize both loan and subsidy resources for the Prgt to continue providing zero-interest lending to low-income countries while preserving the Prgt's longer-term lending capacity. In stage two, low-income facilities and financing will be reviewed again in 2024-25, and there will be a discussion at that time on the appropriate longer-term Prgt envelope in consideration of longer-term solutions to Prgt self-sustainability, including possible use of internal resources. The resource needs for stage one are about $18 billion for loan resources and about $4 billion for subsidy resources. The loan resources being sought are on top of the about $24 billion that have been already secured since last year. For subsidy resources, the fund is seeking voluntary financial contributions of just over $3 billion from its economically stronger members, with the remainder coming from the use of internal resources. To provide donors with flexibility, there are a number of options available for such bilateral subsidy contributions, and we are seeking resources pledged up front, which could be dispersed over time, given the need for domestic approvals and procedures. Voluntary channeling of SDRs to the Prgt could help with its resource mobilization needs. For instance, about 2/3 of the Prgt loan resources mobilized in the previous campaign were provided using existing SDRs. SDRs could also be channeled as investment resources for the Prgt for the purpose of providing subsidy resources. Total SDRs channeled to the Prgt over the coming years are projected in the range of $30 to $50 billion, of which half of that in the near term. These estimates include possible channeling of SDRs as investment resources to generate subsidy resources. Finally, as part of the agreed package of Prgt reforms, staff will annually review the adequacy of Prgt finances, which will include an assessment of Prgt demand, both backward and forward-looking, as well as an update on loan and subsidy resource mobilization. Guillaume, I'm going to pass back to you. Thank you very much.
Thank you, Charlene. So we wanted on this last slide to give the 4 key takeaways we see for this presentation. The first one being that the fund ramped up rapidly its support to leaks in response to the pandemic. Second key takeaway in our view is that higher demand for fund lending to leaks will persist for the next several years. Third key takeaway is that we adopted in July a twofold strategy with an enhanced support to leaks to meet higher demands, but also a funding strategy to back this enhanced support. And fourth, it is now essential to secure additional resources to the PRGT with SDR channeling as a possible help. I would like to add a fifth, which is not on the screen, takeaway, but echoing what Ed said in the onset, PRGT support is only part of a broader contribution of the international community to support low-income countries. Of course, coordinated support from the IMF and other multilateral actors, in particular the World Bank, is essential, but there is also some work to be done with bilateral donors and also a huge work to be done on the debt front. But let me stop here for the time being. Thank you very much for your attention.
Thank you very much, Charlene. Thank you very much, Guillaume, for giving us that overview. And I'm sure there are already some questions that have been raised. Let me turn over to Ed now to introduce our panelists and then listen to their perspective.
Thank you, Masood. I think what I'm going to do is that I would just briefly, first of all, introduce all the panelists. Each of them would have about 10 minutes to speak. And then after that, there'll be some questions and answers which Masood would lead. But to start with, let me introduce them in the order that they appear on the package, at least, and that is the order in which I'm going to be calling them to make their own presentation. Rose Ngugi is currently the Executive Director of the Kenya Institute for Public Policy Research and Analysis, KIPRA, and serves as the Secretary to the board and provides technical guidance and capacity on policy and strategy formulation to the government of Kenya and other stakeholders. I'm not going to go into all the details. I think most of us have the bios of each of them. So the second is Stephen Oswald, who is currently the State Secretary, Federal Ministry for Economic Cooperation and Development. Dr. Oswald has been working in the development cooperation for over 30 years. The fourth panelist is Michael Atingi Ego, who is currently the Deputy Governor of the Bank of Uganda. Mr. Ego was the Executive and Financial Management Institute of Eastern and Southern Africa from September 2018 and has held several other positions, including Director at the African Department of the IMF. And last but not the least is Mrs. Nadia Dar, Head of Office, Oxfam. She has a diverse international development background with several years of experience working with civil society in the Middle East, North Africa region, as well as North America. And particularly, she is interested in issues related to social and economic justice. Now, for all the panelists, I would like them to focus, first of all, on any comments they may have on the presentation of the PRGT reform. And then in doing so, perhaps try to focus on a few questions. There are 3 of them here. What do you see as the impact of the reforms on low-income countries? Do they go far enough? Masood had raised this issue about whether they go far enough. Needed to help low-income countries confront the impact of post-COVID economic destabilization. And the third question is, how will these reforms help or hurt countries' debt sustainability prospects? I think these were issues, some of the issues I raised in the opening remarks. So these 3 questions, it will be interesting to hear your thoughts on these 2 questions, as well as any further questions or comments you may have on the presentation by Guillaume and Charlene. So without much ado, let me turn to Dr. Rose Ngugi to make her opening statement. Over to you.
Thank you very much, Edward. I'm happy to be in this forum. Happy to see Masood after a long time together at the IMF. I'm also happy that this discussion is coming at this time when our countries are really going through a very difficult period with the COVID. When I read the paper and even from the presentations, I think I was very happy with the reforms that are going on, more so because there's an attempt to actually address the key resource gap that the low-income countries may be facing, and also trying to ensure that there is no much competition with those that can actually get into blended facilities. In addition, I was also happy that there is a smooth transition that can be put in when one is falling maybe below or above the GNI per capita level, because there are expectations that in the recovery period, anything can happen. There could be another wave which can take you down or can take you up if the recovery is sustained. So I'm very happy with those. I think the other element that I found a little bit interesting, and I think it's needs to be supported, is the aspect of removing the debt restructuring as a part of the package, and allowing countries really to move from high risk to maybe moderate risk. I think that is the way to go, because we expect that at this time, the filling in the fiscal space will require them actually to borrow as much. And starting from there, I want to say that with the debt service suspension initiative coming to an end, I am not aware whether it has been extended, coming to an end in December, it creates some sort of uncertainty for low-income countries, especially because the recovery process is yet to kickstart. They are just implementing their vaccination program at the moment. And therefore, when the time comes to pay the debt obligations, we may find actually an increase in the demand for funding from IMF to try and stabilize the situation. Unfortunately, with the debt obligations, since you have to meet them, it's either they get the funding. If they don't get the funding, then this can actually create an unstable condition at macro level, and this really deteriorating the situation. For that reason, I see that the amount of access, the access limit that has been increased, at the moment, it serves the low-income countries well. But going forward, one may want to ask, in addition to these funds, how else do you really deal with the limited fiscal space that low-income countries are facing and may continue to face, because they are not getting the revenues that they require, and the demands are very high, and they need to be at the forefront of injecting as much to the recovery process. The COVID-19 has been both a health crisis and also an economic crisis. But as a health crisis, one of the key things that we have seen is COVID telling us that we have major gaps in the health sector. And if we don't address them now, it means that we may not be able to cope up with the situation that we are facing. So with the with the support that would be coming from the IMF, what I see as critical in the programs, especially the multi-year program, is continuing to support in protecting the health and social expenditures such that the health sector continues to be a key factor in promoting inclusion. I'm saying this because this is the question that I was asked to look at. I was asked to look at the question how Prgt could ensure funds accessed and mobilized by government helped to promote inclusion in the recipient countries. So that will be my focus for today. Now, if I look at the Prgt and I look at the extended credit facility, which is like, you know, the real thing that low-income countries go for multi-year, you notice that one of the key elements expected is to be based on the country own development agenda, and it's aimed at safeguarding social objectives. That should remain. But in this period of COVID, one of the things that you'll notice is some countries have come up with the recovery strategies, putting them in place so that they can bridge the period before COVID and where they want to take the economy with the recovery period. So in this regard, I'm not very sure how these programs or these reforms would accommodate recovery strategies in ensuring that the poverty reduction strategies that the countries have remain varied in driving the programs that are set for the recovery of the LICs. The other thing that is clear from the extended credit facility is the fact that it is there actually to move us towards a stable and sustainable macroeconomic position. And we know that a lot of the funds that come from IMF, they end up supporting the external balance with the support on the BOP, which helps to boost foreign reserves. And if I look at a country like Kenya, I see that this has helped to sustain the foreign reserves at a very, meeting the statutory requirements. So they are very high, and this has stabilized actually the exchange rate. And you notice that when exchange rate is actually stable, it makes it easier even to do importation of COVID-related items and other necessities that the country gets. So with the reforms allowing for adequate resources to come in, my assumption is that macro stability will be maintained, and this way inclusion or inclusive growth will be sustained by these countries. My final point is focusing on where we are beginning. With the COVID, poverty has increased. We have seen a slowed and also contracted growth in the region. And to reverse, and with the reversal of the gains that had been made before, we are starting at a very low position in the recovery strategy. In such situations, we have seen governments actually coming up with the enhanced social protections to cushion the vulnerable groups. In some situations, you've seen some of these have been reversed. But going forward, I think it's good to look at the transitional trajectory, whereby the social protection also becomes a part of the protected costs in the program, in the IMF program, so that we can smoothen the transition of recovery for this country. In this way, I feel that it will be easy for the countries not only to rejuvenate themselves in terms of focusing on poverty, which is very low at the moment. Thank you very much. I hope I've spent the time I was around 10 minutes here.
Yeah, thank you. Yeah, I think you are within your 10 minutes limits. So thank you for your observations. You had made a few remarks regarding the importance of this relief from the IMF to shore up the balance of payments conditions and help to stabilize the exchange rate. So I think that's one of the key takeaways we'll hear from you on that. Let me, go now to Dr. Stefan Oswald from BMZ to make his remarks. You have 10 minutes to do that, and paying attention to some of these issues that had been raised in the package too. Thank you.
Thanks a lot, Ed, and good to see you again. And I would like to start that first with the remark that the Ministry for Economic Cooperation and Development is not the ministry in Germany responsible for the relations with the IMF. That's our Ministry of Finance. Anyway, I'm glad to share our perspective, as the work of the IMF is very relevant for our cooperation with partners on the African continent. The work of IMF is highly important for developing countries, not only its lending activities, but also the policy advice, meaning surveillance, Article 4 consultations, and very important is also the capacity building it provides, for example, through the regional training centers in Africa, the so-called AfriTex, which we are also co-financing. This summer, the IMF, with German support, reformed the Prgt to give itself more flexibility to support low-income countries. This added flexibility is good and right. After all, these countries in particular are far from having overcome the crisis, having also in mind what Guillaume presented, that quite a number of those countries already had challenges, serious challenges before. Germany has contributed 3 billion euro to the Prgt, and at the beginning of this year, we welcome the fact that the United States of America will soon, for the first time, also contribute to the Prgt. We ascribe high importance to close coordination and good cooperation between the IMF and the development banks like the World Bank, the regional development banks, or Germany's KfW. I think this is one of the secrets we need to bring really in the front, because, let's say, focusing on what the IMF can do with the Prgt alone, I think is not going to help us to solve the problem. We need to have a kind of a comprehensive approach to address those issues, and we will come to that also back in the discussion. In contrast to other institutions, IMF only provides loans, not grants. Even when the interest rate is zero, like in the case of the Prgt, the funds still have to be paid back. That means that debt sustainability always remains an important part of the equation. Striking the right balance between financing needs and debt sustainability requires realistic analyses that take into account all relevant risks. I therefore agree with the IMF Managing Director Kristalina Georgieva that in some cases we can only help countries responsibly through grants. Where debt sustainability is not achieved and debt restructurings or relief are required, these must not be delayed. The G20 Common Framework for Debt Treatment in Low-Income Countries is an important further development of the international financial architecture for this purpose. The temporary assumption of debt service to the IMF for the 29 poorest countries from the CCRT depends on donor contributions and can therefore only take place for a limited period of time. Germany has contributed 80 million euros to this. Loans from the Prgt are linked to necessary and appropriate reform agreements. With the help of these reform agreements, countries can improve their business, macroeconomic and fiscal frameworks. This reform orientation is also a key principle of the G20 Compact with Africa, where the IMF is also a key institutional partner. One important area of reform activity can be social protection and inclusion. We welcome that the IMF has adopted a strategy on social spending. Especially during the pandemic, it is necessary to show flexibility and prioritization in implementation to protect the vulnerable population. In this context, for example, cooperation with the World Bank, with regional development banks, with United Nations bodies like UNICEF and WFP is very important to create a cushion for vulnerable populations. Macro critical social spending issues design of the social safety net can be addressed with the help of program conditionalities. That means sustainable financing of social spending, spending efficiency, and spending outcomes. At the same time, a commitment is needed from recipient countries to include aspects of inclusion protection of the vulnerable population. That means they need really to execute ownership on those issues. The PRGT was established already in the year 2000 with a clear mandate to fully integrate the objectives of poverty reduction and growth into the fund's financing operation for low-income countries, specifically poverty reduction strategies that the country's own poverty reduction and growth and inclusion objectives play a central role in the fund-supported economic and financial program and LICs. However, IMF PRGT offers balance of payments assistance, not development cooperation, or is not a project development cooperation or project financing. This is precisely why IMF collaboration with other institutions on topics like inclusion and social spending is really essential and of top importance. Looking forward, considerable uncertainties remain for the economic recovery worldwide and especially in our partner countries. In order to make lasting difference, we need to ensure that our efforts are used in the most effective and sustainable way possible. Thank you very much.
Ed, you're on mute.
Sorry, sorry. Thank you, Stephen. I think you've raised a number of very important points. As a donor, you've made some very important observations, particularly indicating that the German government has contributed at least $3 billion to the PRGT. And you also emphasized the importance of a comprehensive approach beyond the IMF's portfolio to really address the issue of debt in the countries. And I think the issue of the fact that the IMF resources are credits and not grants implies that these have to be paid back, and there are implications for debt, so that there's a need, and as I think as the Guillaume and Charlene had mentioned, there's the need to really engage much more closely on the debt sustainability issues in the countries, in the LICs. So it's important that this emphasis is taken into account. You also mentioned the importance of the IMF collaborating with the other MDBs and other UN agencies, particularly given the importance of shoring up social protection during this period of the pandemic. I think that there are quite a number of points you've raised there which are very, very important. And I think during the question and answer period, we will be able to have some discussions around them. Let me now turn over to Dr. Michael Atingo, whom I introduced earlier. He's currently the Deputy Governor of the Bank of Uganda. And similarly, you have 10 minutes. I think everybody so far has being within the 10 limits, slightly lower than the 10 minutes. So I hope you would also do the same. Over to you, Michael.
Yeah, thank you very much, Edward, and very good morning, afternoon, wherever you are. First, I would like to thank the Center for Global Development and the African Center for Economic Transformation for inviting me to share my perspectives on these reforms that are undergoing in the Prgt. And also, I would like to thank the colleagues at the Center for Global Development, particularly Mark Plant and Masood, colleagues whom I work with at the fund, but more so Mark Plant for having mentored me, have integrated me into the fund. I will forever appreciate that. So let me go straight to some of the issues. Like the rest, I appreciate the effort that the fund has put in place to reform the Prgt and actually increasing the access and also lifting some of the caps. But importantly, what the fund did in responding to the pandemic in the year 2020, and thereby helping a number of countries that would have otherwise not got that support. But I guess my comments are gonna be on, look, there have been so many international efforts to help low-income countries to get out of their challenges. These efforts go back as far as the 80s, 90s, early 2000s, and what have you. So many initiatives have been put in place. But we are still here today discussing how can we help the low-income countries. So I think we need to step back and ask ourselves the question, what haven't we done right in the past? That every now and then, we are always going back to discuss how to help the low-income countries weather some of these challenges. So I think that's why I'm going to focus my discussion, because I'm interested in the sustainability of these countries going forward. I like the short-run measures that have been put in place, but over the medium to long term, I think these countries should be able to stand on their own. So how do I address these questions? Let me first start with the impact. I think, like I've said before, the impact of this Prgt is that it's going to provide a short-run amelioration of economic hardships that have been brought about by the COVID-19 shock. For example, the budget support that has been put in place to help the countries deal with the revenue shortfalls as a result of the anemic growth, and also rising expenditures that are linked to COVID-19 pandemic mitigation measures. But importantly, like Ross mentioned, also the balance of payment support to deal with the aspect that export revenues were not performing as it was, and therefore there was need to support these countries import the vaccines and meet some BOP challenges in the short run. But importantly, let me look at the aspect of fragility. And fragility will take two forms here. One, for those fragile conflict states, this has provided an opportunity to consolidate peace with additional resources, given the weak revenue basis that these countries have had, and also at a time when even some advanced economies were having their own fiscal challenges. So this disbursement of the resources is going to help, has helped and will help these countries going forward to consolidate peace. In other words, a situation where resources are not forthcoming, particularly if these resources are used correctly to ensure that those who have suffered the aspect of violence have something to address the immediate needs. And also other countries that have not gone through fragility, through conflicts. Take, for example, there was a fallout as a result of the COVID-19 where most people lost their jobs and government did not have in place strong social safety nets. And therefore they needed to expand their budgets in terms of increasing cash transfers. So this did actually provide an avenue to address that fragility that would have otherwise arisen. So in that way, it's been very, very helpful. But like I said, importantly, these are short-run measures. Although the impact of COVID-19 is of a medium to longer term, given the damage that the COVID-19 has done in terms of reversing some of the socioeconomic gains made. And indeed, Guillaume and Shalom did point out to the effect of this divergence between the advanced economies now and the low-income countries. You can see that the divergence is increasing. So how do we constrain, how do we minimize that divergence in terms of economic performance? So although these are short-run measures, we need to ensure that we actually repair that significant damage to socioeconomic gains that have been made. So how do we do that? Is this sufficient enough? And that goes now to the second question. Do these reforms go far enough? I think let me begin by saying that I think COVID-19 did expose the significant vulnerabilities that were underlying the growth that was being observed in some of the low-income countries. These countries were posting huge and very, very high growth rates, right? But underneath those growth rates, I think there were some vulnerabilities that COVID-19 exposed that we need to deal with. So that if really we are asking ourselves the question, do these reforms go enough? I want to put it differently. To what extent do these reforms address the underlying vulnerabilities that brought problems for these fast-growing countries in the pre-COVID-19 era? So let me begin by saying that let's look at the debt sustainability issues, all right? So while these reforms are talking about increased access, you are removing the cap on lending and what have you, we need to look at the debt sustainability issues. I think Guillaume and Charlene pointed to the fact that of the 69 Prgt countries under the proposed reforms, only 30 countries, all right, are ranked in the low to moderate risk of debt distress. The rest are either in high risk of debt distress or in distress. So of what use will this increased access, removal of these caps be to these countries if they're already that? And do they have the capacity to restructure their debt? I mean, look at a case like Zimbabwe, look at a case like Zambia. What are they gonna do to access this? Do they have the capacity to restructure their debt? There are initiatives like the debt service suspension initiatives. Well, you may sign the framework that you are gonna participate in that. But now to look at the bilateral agreements between the countries, I think we need to look at who are the significant countries that owe these low-income countries money. Who are the big creditors? Are they able really to sign into these bilateral agreements? I know of one country that has refused to sign. I mean, in my own country, all right, if that country had signed the bilateral, we would have got a relief of, a significant relief of about twice what we got. But the unwillingness of this country to sign the bilaterals has not really made the debt service suspension initiative work. So the question then is, how do we bring meaningful solutions to the debt service, to the debt sustainability framework so that countries can access more of these resources that this reform is trying to put forward? And then also, there's a requirement, of course, for these countries to pursue upper credit tranche policies, and then they need to demonstrate the capacity to repay the fund, and the strength of the programs that they are going to have with the fund are really a prerequisite to accessing these resources. So we need to look at the capacity in these countries to actually pursue that, in terms of repaying the fund, in terms of putting in place a strong program, and what have you. Do these countries have that capacity? So I think there are lots of things that we need to do if these resources are going to be accessed. So I want to say that financing alone may not help speed up the recovery. I think, like Edward mentioned earlier on, policy reforms to unlock the constraints to growth are needed far much more than ever needed before. So right now, the low-income countries are faced with a threat of recovery, hence the divergence rather than the convergence between them and the advanced economies, largely because of the uneven access to vaccines, limited policy space to respond to the pandemic shocks, and then the pre-existing constraints to growth, all right, including high debt levels, inadequate public investment management, limited diversified economies, poor governance and social services, including limited infrastructure to support the environment that we're looking at. So I'm still asking myself the question, how do these reforms address these issues? And I'm coming back to that later on, all right, that without addressing growth, all right, no amount of additional financing will solve the problems of these countries. So now that takes me to the two-stage funding of the strategy of the Prgt that has been proposed. And I want to focus on the appropriateness of the long-term funding that is due for consideration in 2024-25. To what extent does it consider emerging challenges to growth that are faced by these countries? And the one that I really want to look at is, let's first of all begin, because in my opening remarks, I said that the COVID-19 did expose the vulnerabilities that were underlying the high growth rates of these countries. So I would want to find out, do we have a sufficiently robust framework to identify the risks and the vulnerabilities that are faced by these low-income countries so that we're able to address that and really restart growth that this financing is going to, to support? Let's look at things like the risks of climate change, which is going to affect growth if not addressed. The bulk of these countries are of agricultural dominated economies, and they are more prone to these climatic shocks. So to what extent are we going to identify all those constraints so that we talk about meaningful growth going forward? And if these are some of the risks, what are we doing to mitigate those risks so that they do not crystallize going forward and affect the growth? There are also issues, okay, that have got to deal with—
You have about two more minutes. Okay.
Okay, I'm sorry. So let me just now maybe try to summarize it all. Recently, the G20 countries have called for the IMF to establish a new resilience and sustainability trust to provide long-term financing to help low-income countries, all right, in order to finance growth going forward. So if you were to ask me, are these reforms going to hurt or they're going to help the sustainability? They will help the sustainability to the extent that they address the structural constraints to growth in order to enhance the taxable and the export capacity of these countries. In this way, the key metrics to sustainability, for example, the solvency ratio, debt to GDP, the liquidity indicators like debt service to tax revenue, debt service to export, will also be affected. And in that way, they can help enhance the sustainability. But if these reforms do not stimulate growth, I'm afraid that it's going to promote a culture of reliance on these short-run measures, creating moral hazards, which will not get these countries out of the current situation that they're in. So beyond increasing the available financing, we need to address the growth issues so that these countries are able to undertake socio-economic transformation to make them sustainable going forward. And therefore, I think the fund has got to work with other institutions that have the expertise in promoting growth, even in the context of increasing the available financing. I'm sorry, I'm time concerned, but I will leave.
Thank you. Thank you, Michael. I think this has been an exposition from a former IMF staff who is also the deputy governor of the Central Bank of Uganda. So he has gone in depth into many of these things. Some of the issues I raised earlier, and he has expanded very cogently on many of those issues. Particularly, he recognizes in the short term the real value add of the IMF program and the rapid response, and made a distinction between the fragile conflict countries, how this has helped to shore up some of the risks and reduce the risks that, without the support would have created challenges for peace building. And also talked about the non-fragile countries and the fact that this has been helpful to support the countries in this in the crisis period. But I think the point that Michael raised, which is particularly keen to me, is the fact that these are all short-term measures, and there is a need to look at the medium to reforms that needs to be undertaken in order to ensure that these immediate emergency, support system, support from the fund can be further buttressed by other sources of financing. 30 of the 69 countries that are in the medium, in the low risk category, all the rest are in the high risk, and therefore there's the need to look at the risk mitigation measures, the question about how Zambia and Zimbabwe can even begin to address their debt sustainability issues and how they're going to do it without the capacity, and so on. So I think Michael has raised a number of very pertinent points, which we would try to see how our colleagues from the fund and any others who have ideas about it can help resolve. So let me now turn over to the last presenter. It's not the least, but the last presenter, Ms. Nadia from Oxfam, to make a presentation. You have 10 minutes.
Thank you, Ed, and I will try my best to stay within that, knowing that you want to try and get to some Q&A. Happy to be here today. And I just want to, let's start by contextualizing things, because I feel like we're in it and it's good to take a step back to see the broader picture of things. We're seeing aid stagnating, dwindling in some places. Debt relief efforts, as some have mentioned, have been minimal. The bilateral debt payments that were suspended for a year and a half under the DSSI will resume again in 2022. The SDR issuance provided $21 billion worth of SDRs to PRGT eligible countries, so created some breathing space, but nowhere near enough. And we know from the IMF's own work that low-income countries will need up to $450 billion to pay for the costs associated with the pandemic over the next 5 years. Never mind thinking about the SDGs and climate goals that we have. So we need a lot more financing. So it's in that context that it's so important and critical for us to be thinking about these questions on the PRGT. So for us, one of the key things we were looking at as these reforms were being discussed before they were approved was its level of concessionality. And we were hoping for the PRGT to get as close to grant terms as possible, maintaining that zero interest rate being really fundamental. And so first off, checking that box was very important. Seeing, as all have mentioned, the number of PRGT countries, eligible countries that are in debt distress or risk of debt distress, that zero interest is really vital. Another area, and just to say, I think it's also interesting when you plug this into the bigger picture of other available concessional financing. So with the zero rate interest and the level of maturity, the PRGT loans, I believe, have about a 32% grant element compared with IDA credits, which have about a 44% grant element. And others can correct me if I'm wrong there, but it puts things into perspective a little bit. And it's obviously not the only way to compare these facilities, but useful on the concessionality terms. But in terms of the grace period and the maturity, that was another area we were looking at. Was there scope for the PRGT to change those terms further? And while that was not changed in these reforms, I think it did help to open discussions around the new Resilience and Sustainability Trust having longer maturity and extended grace periods. So then in terms of the access limits, given where we are, I think it was useful to increase the normal access limits of the PRGT. And I'm fairly keen to explore what this means for the rapid credit facility, emergency financing aspects of the PRGT specifically, because those were the forms of lending that were used primarily in the first phase of the COVID response. And they were very successful. They were rapid. They do not involve any ex post conditionality. And so very limited amount of negotiation needed. And so for us, we're interested, is there scope, given that we're still in this crisis, there are still so many countries that are in the eye of the storm here, that trajectory of the recovery that was assumed early on has not materialized yet. There wasn't a lot of discussion, as I understand, in the scope of the PRGT reforms as to how the RCF, the emergency financing vehicle, could be adapted, or if it should be used even more. But where I want to focus the rest of my time is on areas that were also not discussed and where we think are critical. And it relates to what a lot of the other speakers have mentioned, including Michael and Rose, especially on social protection and on what you're using these loans to accomplish. And so for us, the policies and conditionality being advanced through the PRGT programs are actually fundamental here for understanding the impact, negative or positive, that the PRGT can have. And then the second aspect of that is how these conditionality and how these loans are designed, monitored, and assessed. We're deeply concerned that countries are facing such narrowing fiscal space at the moment and are making difficult and often risky trade-offs. We're seeing education spending cut in order to increase health spending, for example. We're seeing any number of trade-offs that governments are needing to make. And in the case of West Africa, for example, where we've just put out a report recently, in a region where more than 60% of citizens have reported lost income or work due to COVID-19, we're seeing that 14 out of the 16 West African countries intend to cut their national budgets by a combined $26.8 billion over the next 5 years. So that kind of austerity is something that we can really foresee in the coming period, and it's something we need to be highly vigilant of. And we're concerned that the IMF is promoting such austerity in its programs. Our research found on the IMF's COVID-19 loans between March 2020 and 2021 that 85% of those loans were encouraging or even conditioning, where they were programs, countries to adopt fiscal consolidation measures in the aftermath of the health crisis. So this trend is likely to be a global one, and especially in low-income countries. And the types of measures we're seeing being discussed include things like wage cuts, caps and freezes, increases in or the introduction of consumption taxes, particularly VAT, which is a highly regressive tax. We're seeing discussion about public expenditure cuts. We saw discussions of subsidy reform, pension reform, rationalization of social assistance programs. And we have seen the IMF really encourage countries to increase their social spending through the pandemic. But it is in the aftermath of the health crisis that countries are being encouraged to roll back that spending. And it's the resounding advice being given to governments right now. And so, this is coming in the face of where we have found that most countries had not been making the necessary health investments going into this pandemic, which is why we were all so ill prepared to face this pandemic. So it's crucial that the IMF is supporting governments to maintain that expenditure, not do away with it. So we need policymakers to be making the choices that are going to be investing in health systems that are resilient, universal. We need resilient and universal education. We need strong social protection systems. But we're concerned that even if governments have the political will to make those choices, that they may not have the flexibility to make those choices under the conditionality that they would be tied to with IMF programs with rigid targets. which would squeeze their ability to actually make those investments. And the alternative for us, and thinking about, what else could we be doing, a huge area that we see a lot of potential for is progressive taxation, and really supporting the increase of tax revenue. So just going back to the West Africa example, in that region, tax revenue, if it were increased by just 1% in the next 5 years, could help raise $56.89 billion for that region. And we have so much unexploited riches here. While poverty has been increasing sharply around the world, and the World Bank has done amazing research to show the impact on poverty of this pandemic, billionaires globally saw their wealth increase by $3.9 trillion between March and December 2020, including in many of these low-income countries where inequality is rampant. So, and the IMF has told us time and time again in its rhetoric that it will prioritize progressive taxation, that inequality is a major problem that we need to be aware of. Its fiscal monitor earlier this year talked about the need for progressive and emergency taxes to fund the recovery, including taxing excess corporate profits and top income levels, but we're not seeing that in operations. And that's really where the rubber is going to hit the road on if these programs are successful, is ensuring that there is a sustainable and progressive source of financing to spend on these necessary investments. So what do we want to see? We want to see more flexibility on macroeconomic targets, such as inflation and fiscal deficits. And that includes the speed at which a budget should be reduced and what levels should be targeted. On the revenue side, this progressive taxation is key, and there are any number of ways to achieve that. The IMF should also be supporting countries, of course, to restructure their debts and ensure fair negotiations and bringing private creditors to the table, especially. On the expenditure side, we want to see, support and encouragement for countries to make these increased social investments. And then finally, let me just end with how all of this is discussed and negotiated, because right now it is too often happening behind closed doors. And we really need to burst open these doors and instead have an inclusive and transparent national dialogue where different policy options are discussed and presented, and where there is broad agreement and buy-in from country. And when I say country, I don't mean the elite in governments, I mean the people, for an appropriate economic and fiscal strategy. So I'll leave it there, but just to say there's a lot more to be done, and it's not enough to just be talking about these reforms, but really what is PRGT helping countries achieve in terms of a just and fair and transparent and inclusive recovery. Thank you.
Thank you so much, Nadia. I think you've raised a number of issues that are food for thought for this conversation going forward. Let me just briefly highlight a couple of them. And I know that Masood is going to be moderating this question and answer period. So I just wanted to highlight a few of them. I think you talked about the conceptual underpinnings and the whole issue of aid stagnation, debt relief, the DSSI issue, the SDR, which basically about 21 billion, which is not enough. And the estimates that have been done, it talks about over 450 billion that is needed to finance, the recovery program. I think one of the points that you raised, and you said you're deeply concerned, is that countries are facing major fiscal space challenges, and the trade-offs between some of these social programs, particularly the pressure now on education and the shift to health financing has the problem in West Africa. About 60% of people who've lost their jobs, and 14 out of the 16 countries are facing quite serious budget, support issues. I think the other point that's important for the conversation is that you're talking about the huge area of progressive taxation. You mentioned taxation, which is a major issue, and some estimates suggest that about 5.6 billion could be, would be recovered if progressive taxation policies are implemented. the major inequalities, and the problems that are really associated with those issues. So let me stop here and hand over. I think these four panelists have raised a number of very pertinent issues, which we would now have the floor for the question and answer period. So over to you, Masood, to moderate this session of question and answers. Thank you.
Thank you very much, Ed. And we're running a little bit behind in terms of time. So what I want to do really, many of the questions that have been raised in the chat are overlap with what the panelists have been raised. And I want to come back to Guillaume and Charlene and maybe suggest two broad categories of responses. One is a set of issues around, are you tackling enough the content and focus of the programs that would be supported by the IMF in terms of the PRGT, whether it's DRM issues, whether it's inclusion, whether it's issues relating to the growth agenda. So both, the panelists have raised this, it's also come up in the content. So there's a set of questions around that. And then there's a second block of questions. It's really around, you made these changes in the architecture, but can these changes actually deliver without also looking at other changes in the design of the facilities and constraints on the financing? So that includes, how in how many countries will debt sustainability actually limit the ability to use this? Should you have been looking at longer term maturities for this? So it's really design issues, which, what do they go far enough? And in particular, the debt issue, is that going to be a binding constraint that in practice will mean that this, notwithstanding these new limits, you won't be able to actually provide additional financing? So in the short time frame, let me come back to you for any initial responses to those two broad categories of points.
Sure. Should I start, perhaps, if that's okay for you, Masood? First of all, thank you very much for this debate, very rich. I think hearing the comments, we may have given more place to the content of the programs because, in a sense, it was for us so, implicit that we haven't even thought of making explicit what need to be explicit. Let me explain what I have in mind with three very brief points. One is the need for coordination and cooperation, which was mentioned in particular by Stefan. I mean, definitely, all the more in the context post-COVID, where needs are high and financing sources are relatively limited, and the area of expertise in the different institutions being able to leverage one on each other, there is a need to further strengthen the coordination and cooperation among actors. It's particularly true for international organizations, but it's also true vis-a-vis the bilateral donors. And I take the opportunity to thank Germany and other donors for their huge contribution to our work. The second point is in terms of content of the programs, definitely our programs are there to stimulate growth, inclusive growth, sustainable growth, and poverty reduction. That's the bulk of what the PRGT is for, of course. All the areas that you're mentioning, Masood, are embedded in our programs. Domestic resources mobilization, growth agenda for sure, private sector stimulation, inclusion, all of that is part of our agenda. Also governance issues, tackling fragility. As you know, we are working currently on devising a new strategy for fragile countries and for funds improvement in fragile countries. All of that is really at the heart of what we are doing. Third point I wanted to mention, in line with what you said, is debt sustainability issues. Definitely, this support to low-income countries has to be very comprehensive and holistic. There is new financing coming from the international institution, coming from bilateral donors, but there is also the work that countries themselves have to do in terms of domestic reforms, and there is an action to be done on debt, that's for sure. I think Stefan mentioned the common framework for debt treatment in the 73 countries that were eligible to the DSSI. We are not there where we wanted to be, frankly. I mean, it was a major breakthrough in terms of sovereign debt resolution architecture when the G20 agreed on the G20 common framework last year. As we know, only 3 countries have requested a treatment under the common framework so far. Chad is moving forward, so it's good news, but it took long. The next test case is really Zambia. We need to make sure that it works quicker, more quickly for Zambia. Together with the World Bank, the IMF has pushed forward some very concrete proposal to make the common framework work better. And definitely the G20 should be up to the task. They committed in October to step up their effort to implement the common framework in a timely manner. Let's be concrete and serious, in particular with Zambia. This is about having quicker procedure, quicker decision-making processes. This is also about having a standstill for countries requesting a debt treatment between the time where they request the treatment and there is an IMF staff level agreement and the time where the debt treatment is effective. So many concrete proposals that we have in mind. Perhaps we don't have the time to develop them, but definitely I agree with all of those who mentioned the need to have a comprehensive approach. And just to finish on inclusion, I wouldn't call that austerity, but worldwide, it's not true only in low-income countries. Worldwide debt level are at historic high level. So there is a need for fiscal consolidation one way or the other. This comes through growth, higher growth, but there will be definitely a huge work to be done in terms of how you raise tax in a manner which is fair, which is consistent, which is socially acceptable, and how do you protect social spending. As you know, our Prgt program have floors on social spending. We protect social spending, including education, because definitely that's needed to address the development needs and fragility and to secure human capital accumulation. So let me stop here, but all very good points.
Thank you, Guillaume. Charlene, anything you wanted to add?
Thanks very much. I think Guillaume covered it off nicely, so I will not come in unless there are additional questions. Thank you.
Thank you. We should have a separate conversation, Guillaume, perhaps another webinar on the debt issues that you raised, because I think in my mind, one of a little bit of a disconnect is that no matter how fast you move with the common framework, you've got 3 of the countries that are sort of currently in that pipeline. But on the other side, you've got, 39 countries that we're saying have some debt issues, and how we try to address, how do we try to ensure that those debt issues in the remaining countries don't become an impediment and get treated early will be something that'll be worth having a separate conversation on. Before we end, I just want to make sure that, do any of our panelists want to come back with anything? No, we're already at the closing time, but.
Masood, can I?
Michael, please, yeah.
Yes, thank you so much, Masood. Let me just go back to the issue raised by Guillaume. Yes, I agree that most of the countries have in place poverty reduction frameworks and growth and what have you. But I think the point I was raising was that we need to step back. We've had these programs for donkey years, right? But when the COVID-19 hit, the growth that we had seen in these countries kind of like evaporated. So to what extent do these reforms address the underlying vulnerabilities that these countries are? Because we will again come back with another reform on financing, all right, if we don't address these things this time around. So I think we need to step back and look at it critically. All the issues that Guillaume has mentioned, they're very perfect on paper, but in reality, I don't think these issues are being addressed. Otherwise, we wouldn't be where we are today. We've helped these countries for over 2 decades, but we are still discussing these countries. Thank you.
Thank you very much, Michael. And I think that's an important point to make. That links also to a point that was made by a number of panelists about the importance of the IMF working with other organizations that are really looking at some of the underlying real economy issues and the structural pillars on which you can develop and implement a sort of more resilient growth strategy. And to my mind, if I understand correctly, the way I understood it, the Resilience and Sustainability Trust would be one very important instrument to be able to go into that longer term agenda, but also to look at the links, the strengthening the links between the macro and the structural. But I do appreciate, Michael, for you to have raised that, because if we don't do that, you can only deal with, in a way, the macroeconomic manifestations of an underlying vulnerability and you really have to get to tackle those. So I think we have reached the end of our time. Certainly on behalf of Center of Global Development, let me thank all of you participants. Let me also apologize for the fact that at the beginning, we had some issues with sound. I understand that was not there for a number of people on the audience, but we will post this on our website, as I'm sure will Asset, and it will be available with the complete audio, so there won't be any interruptions in the audio on that, but I do apologize for the problems it caused to some people in the earlier part of the webinar. So Ed, any final thoughts from you before we close out?
Add to what Masood's saying, just to thank everyone that participated in this webinar. I think it's been extremely insightful. We are particularly grateful to Guillaume and Charlene for having taken the time to give us a deep dive into the structure and nature of these reforms, which the IMF has undertaken. I think there are still a number of unanswered questions, and as Masood said, it might require some further deepening of the conversation. And I think the point that Nadia raised about the role of the stakeholders at the national level engaging in the debt issue is very, very important. But without much ado, I just wanted to again say thank you all on behalf of Asset and CGD for participating in this event. And we hope to see you again sometime soon. Thank you.
Thank you, everyone.